Now, I'm not lying when I'm saying I rode my bike to the Bitkom headquarters in order to be the moderator today. I use my bike quite a lot. Actually, you get faster through Berlin on your bike than when you use your car. I'm also vegetarian, and I have been a vegetarian for a very, very long time. Doesn't make me a better person, but in terms of sustainability, I think I can sort of sleep more easily at night. And I do have to admit that since the coronavirus pandemic, I am one of those people who'd rather board a train than a plane. All of that are all those cliches that we associate with sustainability. Probably doesn't hurt the environment, that is true. But when we talk about sustainable banking, what exactly are we talking about? Green financing, all of that. Is that just greenwashing, or is there more to it? Are we on the right track? And I think, Kevin, you're ready to put this and many more questions to your panel now.
I think this is really important, as we just heard, that banking and finance is so integrated in our daily lives. I think it's important to shine a light on this. And we have an interesting panel up, but before I introduce our panel, I'm happy to welcome Miriam Staub-Bissang. Miriam, who is country head of BlackRock Switzerland, who will just start with a quick impulse to provide us with some food for thought later on. Miriam, I'm happy to have you here. The stage is yours.
Thank you. That's so kind. This introduction, I actually listened to the few things you said about the bank branches, and I was thinking about when I was 16, did I go into a bank branch? I mean, I didn't even have money, so I don't know what I was doing there. So, but that having said, this has been a long time. Let's focus on sustainable finance and what we do today at BlackRock and more broadly in the finance and asset management industry. There is an Indian saying, we have not inherited the earth from our parents, but borrowed it from our children. This saying has stayed with me, and I find it a guiding principle in many ways. Even when we talk, as we do today, about investments, asset allocations, and the role of investors. And with that, welcome to my brief keynote on sustainable investing, which will be followed by what I'm sure will be an exciting panel discussions with true experts in the field of sustainability. In January 2020, we at BlackRock showed our conviction that sustainability risks, and especially climate risks, are investment risks. And as a result, that sustainability would be our standard of investing. A few weeks later, COVID-19 hit the world, exacting a horrific human and economic toll that still continues today. In early 2020, as markets tumbled, many of us expected that the pandemic would slow down global action on climate change, but actually just the opposite happened. The pandemic forced society as a whole, companies and investors alike, to realize how fragile our planet is. And with that, it has driven us to confront the global threat of climate change even more forcefully. We have no chance to fight climate change if we do not manage to limit global warming to well below 2 degrees from pre-industrial levels. Investors globally have woken up to this challenge, and more capital is going towards sustainable investments. Investments that take sustainability considerations, E, S, and G considerations into account. In 2020, the trend towards sustainable investing accelerated further, and investors in mutual funds and ETFs globally invested $360 billion in sustainable assets. This is important, more than double the assets in 2019. So with sustainable investment strategies posting over 5 times the growth of the overall asset management market, this investment approach is really gaining speed. I personally believe that this is the beginning of a long but rapidly accelerated transition towards sustainable investments, one that will unfold over many years and reshape asset prices in every type. We know that climate risk is investment risk, but we also believe that climate transition presents a historical investment opportunity. So the problem we're facing is, how do we shift from a carbon-intensive economy to a so-called net zero economy? Well, because the global economy today is itself carbon-intensive, the portfolios of most diversified investors remain carbon-intensive. This cannot and will not change overnight. But we see a significant global momentum towards a net zero economy. Today, 127 governments and 1,100 companies globally, which are responsible for more than 60% of the world's emissions, are considering or already implementing net zero commitments by 2050. We at BlackRock, and also me personally, believe that clients are best served by being at the forefront of that transition. On a side note, and what's often misunderstood, what do we mean when we're talking about a net zero economy? Net zero doesn't mean zero emissions. A net zero economy is an economy that by 2050 emits no more carbon dioxide than it removes from the atmosphere. The scientifically established threshold necessary to keep global warming well below 2 degrees. To get there, we first need to change our course of travel dramatically and decarbonize our economy, change our production processes, change our industrial processes, and lower the amount of carbon dioxide that goes into the atmosphere. Second, the residual emissions need to be absorbed by nature, forests and plants. Only with these concerted efforts, we have a chance to reach net zero emissions by 2050 and to keep global warming well below 2 degrees Celsius. So for the next years, what does it mean? It means that we need to reduce global total emissions by over 7% every year, a challenge in a growing economy. In a net zero economy, the respective roles of shareholders and stakeholders of the wider economy and society as a whole change, and we're moving from an economy dominated by shareholder capitalism to stakeholder capitalism. In a net zero economy, investors are not only looking after profit as the main goal, but also take into account the demands of other stakeholders. And what does net zero mean specifically for companies and investors? I believe 2021 and beyond will see a tectonic shift of capital based on changed preferences from investors, regulatory frameworks, and the impact of society. Recent news you might have seen or read are the growing pressure on Shell, Exxon, and Chevron to change course and to reduce the greenhouse gas emissions. A Dutch court, for example, ordered Shell to cut emissions more drastically than the company has planned. So things are happening day by day that one could not have imagined to happen, say, 2 years ago. Let's look at the solution for the net zero economy that we at BlackRock have in mind. In 2021, we went a step further in our commitment to sustainability and committed ourselves to a net zero economy by 2050. This in alignment with the Paris Agreement. We defined a set of measures to focus on to help our clients meet their objectives related to a net zero economy. And we're doing this in 3 broad categories: measurement and transparency, investment management, and investment stewardship. Let me just touch on a few of those measures. First, in the category of measurement and transparency, we aim for better data and measurement on how portfolios are positioned for the energy transition. So we are developing temperature alignment metrics that are necessary to measure the temperature alignment with a net zero pathway of the securities of issuers held in funds of portfolios. So an investor should know, is my portfolio, say, 4 degrees aligned or 1.5 degrees aligned? I am sure the people that have become vegan, that drive electric cars or cycle to work or to conferences, will prefer portfolios which are 1.5 degrees aligned. Second, investment management. Here, we're already factoring in climate considerations in our capital market assumptions. So forecasts on regions and sectors include the effects on climate change. What will climate change do to the growth trajectory of emerging economies in Southeast Asia, for example? And then we want to help our clients benefit from investment opportunities related to the energy transition. Just think of the electrification of transport or opportunities related to a circular economy. Third and last, investment stewardship. Investment stewardship means how we're engaging with companies as a shareholder regarding governance and sustainability to help promote durable and long-term profitability of those companies. And mind you, BlackRock, through its ETFs, is one of the largest shareholders in every large company in the world. For us, sustainability, the management of sustainability risk, and in particular climate risk, is one of the key drivers of long-term profitability. So we force companies to lay out climate risk transparently and present a plan how to align operations with a net zero 2050 goal. And you will see us more and more to support shareholder actions on sustainability and vote publicly on those climate issues. So in summary, to come back on my quote in the beginning, sustainable investing has become mainstream in many places, but needs to be pushed further. Not only because sustainability can be seen as a stability factor and a performance factor, but also because we want future generations to live in a healthy and equitable world. So with this, I would love to go over to the panel and invite Maren and Michael to join me on stage.
Maren, yeah, Maren and Michael will join us on stage very soon. But before that, let me just briefly say thank you, Miriam, for just giving us this very global perspective from the largest asset manager on the globe. I think it's really interesting as you are concerned with so many different industries. So I think this is really something we can dive a bit deeper at this stage. And to do so, I'm very happy to welcome Michael Schweikert, who is co-founder of Tomorrow, a Hamburg-based sustainable mobile banking company. Michael, I'm very happy to have you here today. And next to Michael, there's also Maren Heiß. I'm happy to have you here as well. She's head of retail banking of Deutsche Kreditbank, DKB, a very famous and widely used German online bank. Maren, I'm happy to have you here as well. Maybe after we heard this impulse from Miriam, Maren, Michael, I would like to start with you, maybe with the question. If you look back like 5 years ago, I mean, sustainability sort of moved like from a leftist eco bubble really to mainstream. So what are your thoughts with looking back with your knowledge about the industry? What has changed within the last 5 years? And maybe where are we or what still needs to change? Just as a quick intro, maybe starting with you, Michael.
Yes, thank you for having me. Yes, 5 years ago, it's approximately maybe 4 years ago is when we started thinking about founding Tomorrow. And one of the reasons was actually because we wanted to invest sustainably ourselves. And we did some research on sustainable funds and found that I think there were 300 something at that time that were labeled sustainable. But when we looked into these funds, we found that there were only 3 or so which were truly sustainable. So which did not have any oil and gas industries in it, no tobacco companies and other polluters. And so that's the reason why we started Tomorrow. And now when I look at the environment, at the market, the last time I checked, I think there were 750 available funds in Europe that were labeled sustainable. And I think the number of funds that are truly sustainable are still only a handful. So in general, yes, the topic has become mainstream, and the label has become more and more popular. However, I think the insights still do need some more changes, so that we can actually truly start leveraging finance to create positive impact.
Thanks for that. I think you have raised a few points. I want to dive a bit deeper just in a second, but maybe Maren, what is your point of view? Maybe like compared to the business Michael founded. How does sustainability tie in like with a broad spectrum of different clients with different needs, and maybe not like with this niche towards sustainability?
Yeah, thank you. I think at DKB it's a little bit different, because when I look back at the history of DKB, I think since our foundation in 1990, we always was very engaged to try about having sustainable finance options. I think since 1990 we implemented around 4,500 projects in the field of wind, solar, biogas, and hydropower. And so if you put a sum on it, it's about 9 gigawatts of capacity. And so we're, especially on the business client side, one of the biggest or most important banks for sustainable finance. And I think what changed in the last years is that this mega trend, or I think it's not a trend, it's reality now, came to the retail businesses. And now we have a huge target group, and it's not so that our target group is still the decision making, it's a sustainable bank. No, it's about paying nothing for an account. And so this is the most important decision our customers have when they want to come to DKB. But our approach is to be more and more sustainable, and it's a part of our DNA now. And so we can offer, without that our clients know that they are invest in sustainable finance, because we do it. And so this is a perfect match. And so it's not just a trend for us, because it's already a part of our DNA since about 20 or 30 years.
Thanks for that, Maren. I think you also brought up something interesting, which is client and customer perspective. And we also have questions from the audience I would like to try to incorporate. So maybe I think we all can agree that sustainability is something important, and it actually trend is not the best. I think the best expression for it, because we have to actually act in order to keep our world as it is intact. But now focusing on sustainability, would you say that this is something we as a whole, so be it the financial institutions, but also like customers, consumers, B2B consumers, have to afford, or can it actually be a profitable business? Maybe start with you, Michael.
I totally believe that sustainability can be profitable as well. I actually do believe it's a very good risk management system too. And so many studies have already shown that if you invest sustainable, that these investments actually are able to at least reach the performance of the market, if not more. And I think we will see actually an increase in that trend, because now we have really accelerated over the world the trends towards more regulation. Many governments and also many more customers are looking into what are companies doing in these areas, and as we see CO2 prices increasing across the world, which is necessary if you want to stop climate change, right? And so if you look at all these developments, the companies who are already today making a good job and working on all these aspects, reducing pollution, reducing CO2 emissions, being transparent, having a good governance. So already looking into all these factors, these will be the companies that will be also financially the most sustainable. So I totally believe that it's a very good investment criteria that will help investors benefit financially as well.
So profits and sustainability go together. This is very interesting. I want to take up a question from the audience, actually, Miriam, which is posed at you as representative from BlackRock. Is there actually, do you have some calculations on how much profit losses investors would have to accept to actually implement a net zero approach? So in terms of how much money do you lose or will not gain? Do you have a number on this or a rough calculation?
I think it's a very interesting question, and we look at this transition to net zero more from, say, a complete transition, but also from an opportunity perspective. So on the one hand, the slide I showed on the capital flows, we see this truly as the beginning of we call it tectonic shift. Tectonic, I mean, it's a huge shift of capital towards sustainable assets, sustainable companies, sustainable real estate, and that in itself will accelerate a repricing of those assets. So we are of the belief that taking these tectonic shifts into account, coupled with the mitigated risks related to climate risk, investors will actually not have to, the investors' performance will not be detracted by assuming a sustainable investment approach. And obviously, there are sectors which will suffer more from a transition to a net zero economy than others. Let's think about the IT sector. The IT sector is likely to be net zero much quicker than, say, for example, companies, utilities companies, energy companies, or like a cement producer. They will struggle. So for them, the transition to a net zero business model will come at a cost. And I think what it will do to investors who want to invest in alignment with a net zero transition path, they will favor companies which are well aligned with that path and turn away from companies which are not on that path. So companies which do not embark on a net zero path will find it harder and harder to get capital from investors. So it will come at a cost for them, and investors who are invested in those companies obviously will lose.
I think that's a very interesting answer as it shows the dynamics that are going on, and I think as you call it, tectonic shift is interesting as apparently also investors start calling for taking actions, and I think if we mobilize the masses, so to say, I think there's a huge leverage that something can be done or it can be improved if we look at the future. But maybe from a consumer perspective, like end consumer, and now I'm talking more about banks. I mean, if I think as a consumer about a green lifestyle, I would, as Monica mentioned, I would take the bike or I would take the train instead of the car. I would maybe try to reduce my meat consumption, and I would try to do, I don't know, shop groceries that were planted locally. What is your feeling, maybe starting with you, Maren, what is your feeling? How are the shifts within your consumers? Is there still a mindset gap, or are they well aware of that the financial products have an impact on their CO2 footprint, so to say?
A good question, because I think when I look at different studies, they always shows that about, I think, the last study I wrote was about 45% described social and ecological sustainability as an important aspect of a financial investment. And so I have to say I think about 70% of us women say that sustainability is much more important while investing money than the guys say. And so I think especially the younger generation will take a look and will challenge us banks if we're just saying, yeah, we're sustainable, come on, invest, and you have an account with us. No, it's much more. It's about little things. One example is we thought about our new credit cards, about the material. And so I'm myself invested in some companies bringing plastic out of the ocean. And I was, oh yes, let's do a plastic card coming out of the ocean. That's fancy, that's cool. Then they showed me the CO2 sum of it. And I was, okay, maybe not. And now our new credit card will be made of European rubbish. And believe me, it doesn't smell the card. But I think, especially the younger generation, this will be a real feature for where is my next bank, and is it greenwashing or is it a real sustainable bank? And so at DKB I live in Frankfurt, but I work in Berlin. But I took the train every Monday and every Wednesday. Nearly all my colleagues are vegetarian, so we really inhale this spirit, and we stand for it, that we're a sustainable company, and so we force it in every part, in products, in fundings we get, in green loans and stuff like that.
I think that's very interesting, Maren, and also points that we are maybe some sort of generational movement. Linking your answer, and maybe pass over to Michael. What are your views, or what are your insights about your consumers? Where do they come from? Is it like still very niche type of consumers, or have you reached mainstream? What are your goals in that, and what is the feedback from your consumers, and how maybe that ties back to what Maren just said?
Yeah, so when we look at our customers, we see they come, from all age groups, and also from urban areas as well as rural areas. So I do believe that it's not a niche anymore. It's a very large and growing segment, which should be growing as fast as possible. And I think when you look at consumers, I think they have more power than they think. So they have many things they can influence. It's how they vote, but it's also what they purchase. It's how they travel, all of these things. And I think it's what we're seeing right now. Many people are looking into what can they do, and also trying to find out more, what impact do I have? So that's also one of the reasons why with Tomorrow last week, we launched a CO2 footprinting tool. So a tracker that every time you pay with the Tomorrow debit card, you can actually check through the app how much CO2 emissions were created or produced through that purchase. And so there's a difference if you buy gas at the gas station or groceries, so that consumers get a feeling on what's the impact. And here we're trying to bring transparency. It's still up to the consumers to decide what they do with the information. But I think they do have a lot of power. And I think also for them, it's the best thing is to start with the things that are easy. So if you have to go to the US, it's probably you will have to fly, and it's not so easy to get there otherwise from Europe. But switching to a sustainable bank account is something you can do within 5 minutes. And you're already creating a positive impact. So I think this is actually one of the things where people should start.
Mm. Well, thanks for that insight. And I just want to take up another question from the audience, which I think is quite interesting, quoting that, who do you think actually have more or the bigger influence in terms of making a more sustainable world? Is it actually the companies, or is it the individuals that maybe build up some pressure on the companies and finally lead to major change? As we have heard that, especially I found it interesting from a BlackRock perspective, that there is a shift basically throughout all industries. Maybe just a quick round, starting with you, Miriam. What is your view? Do you think it's the companies or it's the consumers who have the most pressure to drive for sustainability?
It's an interesting question, and I think we need the companies to make the change. But what forces the companies to make that change are essentially individuals, which reflect their views in regulation with policies, the people they vote for and elect on the one hand. So I think that's the regulatory aspect. And then I think it's how they invest and where they put their money, be that as individual investors with their own savings, or be that represented through pension funds that manage their savings. So I believe, but could be a perspective bias, that there is so much power now with investors to force companies to change. Because you have to imagine, companies, when they go to the capital market, it matters what the price will be for capital they take up, be that in debt, in loans, or be that in equity capital issues. And if there are no investors who want to buy the stock that is being issued, think about tobacco companies to take it away from the climate question. A lot of people don't want to own tobacco companies anymore. How do tobacco companies finance themselves? Where do they get the money to finance their growth? The same applies for companies now that struggle with climate risk. So I think there's a lot of power with investors, but that essentially is driven by individuals that stand behind that money. So I would say the power is with the individuals that drive the change. But we can't do it without the companies, of course.
Of course, it's very interesting. I think you pointed out to a few specialties. I think we have to do this round again to dig a bit deeper to see where special cases just put in a global in global terms. But maybe Maren, what is your view? From whom is the pressure coming? Is it you like trying to change the behavior of a customer, or is it vice versa?
I think I can sign every sentence Miriam said. But we are really convinced that the financial sector in general, or the companies, but banks in particular, have a decisive role to play in the sustainable transformation of the economy and society. Because I think it's still a transformation, and there are a lot of people really reflecting themselves, reflecting lives, but it's not enough. And we need the people outside, because we have to offer sustainable products. And when I look at the maybe bond market, DKB is one of the only European bank who can offer really a green bond along the EU standards for green bonds. And I think we get so much. Yeah, it's not so easy to offer really green products, because there is still the thinking in the mind of people, investing in sustainable finance or in investing in sustainable products. Do I really have revenues? Yes, you have. But in the meantime, in our days, you have to really look, you have to search for the products. And I think every bank has really, need to develop more and more. And so I think really we have a decisive role in this transformation.
Thank you very much, Maren. Michael, if you hear all of this and maybe play the same game we did on the panel earlier, fast forward 10 years, do you think you will use your, so to say, sustainable only USP? Do you believe that basically all companies are gonna move in a direction where you maybe started your product from? Or do you think we will be in a similar situation in 10 years as well?
Before I go to that question, I wanted to add something to the consumer power of the consumer debate. because I also mentioned the power of the consumer, but I think there are two big problems with that. And the one is the power is often theoretically, because the companies make it very hard for the consumer to actually see what is sustainable and what not. So they're making it as hard as possible for them for the decision, like, you know, labeling their funds with ESG, and it's very hard to find out if these funds are truly sustainable or not. And the same goes on, you know, with the food industry and every other industry. And the second problem with, you know, shifting the power to the consumers is big companies actually, big corporations actually induce many of these movements towards the power to the consumer, because this way they make the consumer actually responsible for their behavior change. And they know that it's hard for consumers to change their behaviors. And by that, the corporations shift the responsibility over to the consumer. And this is also what politics do. So I think in theory, the consumers would have a chance. However, everyone is making it really hard for them. So I think this is the big problem. And in terms of the other question you just asked, where do I see the market going, and is it still going to be USP? I think the USP will need some more refinement. I think, but here it's also, there will be a distinction between a little bit sustainability or greenwashing and true impact companies. And it's like digitalization, right? So there are truly digital companies, and there are old established industries, you know, that now have a website, and there's a difference, right? If you really think the company digital first. And the same goes for impact. So when we look at impact and sustainability and how we believe the industry is going to evolve in the next 10 years, so we're still at the very beginning, and many of the old companies now just put up a website, or in this case, you know, saying, yeah, we are doing something sustainable. But in the end, the companies that will succeed in this space will be the ones that truly understand impact and sustainability and build that as their core competency. And it's also not something that you simply add to your company, something where you really need to grow and build the expertise.
I think this is really interesting perspective you just added, because I think as we are at such an early stage, and I think if you look at the consumer, we still need to be careful. We still need to check of where we want to go. But I think it's so interesting that at the current stage we have like this mutually reinforcing ecosystem, so to say, between companies, between consumers. And I'm very interested and curious of how this entire discussion is going to develop and where it's going to take us also product-wise. I think this is very interesting for us at Bitkom, where we think that digitalization and sustainability really should go hand in hand. The three of you, I'm afraid we just ran out of time. I think we could talk at least for another hour on this important issue. But I think we're gonna skip that to the Digital Finance Conference 2022. On that note, thank you for joining us today. Have a great evening and have fun with the rest of our conference. Bye-bye.
Thank you. Take care.
Thank you.
Bye-bye.